Hi guys, thanks for tuning in to another episode of Nuggets News. Well, we've got a special show lined up for you today. We're going to talk about the Bitcoin and Litecoin 4-year super cycles. If you followed our work, you know I'm a big believer that the market has these cycles and rhythm, and human psychology comes through in the charts. On the shorter time frames, we always have our time cycles on the charts, and they've helped us pick some important turning points over the past couple of years. But today we're going to zoom out and have a look at these macro super cycles. So if you're familiar with how Bitcoin and Litecoin work, every 4 years, the block reward that the miners get for supporting the network is halved. And the next one's a really important one because the inflation rate of Bitcoin is going to step down from around 4 to around 2%. Now, governments around the world target inflation of between 2 and 3%. So comparatively, Bitcoin is becoming even more attractive, just another reason to own it. And I think it's going to be a big driver of the run-up in price that I'm predicting. Now, the Litecoin halving is only around 6 months away, so we're going to look at that chart first before we look forward to the Bitcoin halving in around May 2020. So let's jump over to the Litecoin chart, and we've got to remember that this is on a log scale because of the exponential nature of cryptocurrency growth over time. Now, Litecoin was first traded for only a few cents. It wasn't widely traded at all on exchanges, so I've just drawn this line of best fit in to help you get a visual representation of these time cycles. So the green time cycles are subjective. I've put those on the charts. I believe that I've identified cycles and rhythms in the market over time. Now, the black horizontal lines are the inception date of the Genesis block for Litecoin and then the halving date, so when that supply is reduced. And what we tend to see is that we have these big run-ups in price that last for the majority of the length of this time cycle, followed by really deep corrections. And it's quite normal for cryptocurrency to have these 90% plus corrections before we have another big run-up in price. And this tends to start around 6 to 12 months before that halving date as people anticipate the reduced supply, the scarcity of these cryptocurrencies. So once again, huge run up in price to the tune of thousands of percent. It's quite normal in crypto to have these, 100-fold returns, but it does get harder as the market cap grows, and I want to talk about that as well. So we're currently in another 90% plus correction for Litecoin, and when are we looking for it to bottom? Well, if these time cycles hold true and the market starts to anticipate that next halving, which is in August this year, we could expect a lot of buyers to start to come in anywhere from February, March, April, and that price of around $20, give or take a few percent, is certainly where I am targeting. Now, if we have a look at previous growth, we can see the aggressive nature, and once again, this is because it's coming off such a low base. It's quite easy to have these high returns. Now, as the market cap grows, you'll see the slope or the gradient of this line is decreasing, and that represents, I guess, more people coming into the market. It's harder to have such an aggressive growth. It's harder for Bitcoin or Litecoin to have a 1,000-fold return than it was when the market cap was so tiny, coming off a few cents. So what's a realistic price target? And I actually think Litecoin could easily go to $2,000 in this next cycle, and that would fit with the decreasing percentage returns, the decreasing slope of that trend line, and then we could have another perfectly normal deep retracement to the tune of 80 or 90% and retest the old highs of around $300 before we have another deep correction into March 23. So that would all fit with the picture very much with that previous market action. But let's jump over to Bitcoin. I'm sure you all want to know what's going on there. So once again, we've got these vertical black lines, the Bitcoin Genesis block in 2009. We don't have a lot of trading data. Bitstamp goes as far back as we can. And that first deep correction for Bitcoin was that $30 down to $2. So 90% plus correction, and then the market bottomed around a year before that first halving date in November 2012. We then have that really aggressive run up in price that goes for the majority of the length of this bracket before another deep correction to the tune of 86% if we go to the bottom of that wick, and the crypto winter lasted a little bit longer there, around 600 days. We then have that bottoming about 12 months or so around that next halving date, which was in September 2016. So we then continue higher for the length of this bracket, and that brings us to the most recent bull market. And again, we're currently in this deep correction. Quite normal for crypto to have these 80 to 90% corrections. Now, if we are to have a 90% correction, that takes us right down to around that $1,300, testing that previous high. And a lot of people are talking about that. Now, some people believe that the damage would be too much to Bitcoin. People would be thinking it's dead at that stage. But as we've seen for cryptocurrencies, the volatile nature of them, it is actually perfectly normal for them to have these deep corrections. And I believe that would be a fantastic buying opportunity if the fundamentals hadn't changed at that point, and you can get Bitcoin for $1,300. Now, this date where the market begins to anticipate the next halving is around May or June this year. So let's keep an eye on that date. Let's see if the market front runs this. This is the first time the halving has been in the public eye, so people might begin to anticipate this even sooner than normal. But if all goes to plan and these cycles hold true, we're looking for that bottom around May or June. Now again, let's get out these aggressive growth trend lines, and you'll see that the gradient of that slope does decrease, and again that represents that it's harder for crypto to have the same aggressive growth as the market cap grows. So if we go to that $1,300 mark, even in a worst case scenario, crypto could still, Bitcoin in the next run could still get to around $100,000 if we have another right-hand translation where we go up for the majority of the length of that bracket, and then we could see another 80% correction to test the previous lows. And as Simon Dixon said in that interview the other day, he fully expects his $100,000 Bitcoin to go down to $20,000, and that would fit these time cycles and the rhythm of the market perfectly. Now, if you follow my work, I've done a 3-part series on why I believe Bitcoin could reach $1 million in the next 10 or 20 years. With all the fundamentals. So check that out if you haven't already. What do you guys think? Do you believe in market cycles? Do you think these are going to hold true? Are you expecting Bitcoin to go down further and bottom around that date? Let me know in the comments below, guys. I hope you've enjoyed this presentation. Please hit that like button. Subscribe if you haven't already. Share these videos around. And thanks for tuning in, guys. Cheers.